Good afternoon. Welcome to Take Stock Live. Today's date is January 28th of February 2021. My name is Sam Evans. I am your host of Take Stock Live and here with powered and brought to you by stockability.com. I hope you're having a great week so far, and I think we've got a really good show planned for you today. We are live here on Facebook on the Stockability homepage. This show is live, so please tune in. Type your questions. I'm getting them coming in. Phil Jackson, good to see you on the show already, looking and viewing on here right now. And we've got an action-packed show. And if you are looking at the recording of this show, then remember that you might be looking at it here on the Facebook Live Stockability page, or you can check out the Stockability YouTube page where all of our previous shows are also held. So, wow, what a week. Here we go. Plenty of stuff going on in the news. I think the top of the news is short squeezes, GameStops, AMC. Man, I love the live environment. And you know why I love the live environment? Because we can get to talk about these things in real time and get your questions all coming out in real time as well. GameStop will be a subject on AMC, Wall Street Bulls, all of that. What do we think about it? How do we interpret it? What does it mean for the future of trading? Some really, really important things on here to talk about as well. But before we get into it, let's look at what the market is focused on today. What's hitting the headlines for today? US stocks are set to open higher after a rough day. Right now, looking at this, QQQ's up $5.11 on the market right now as well. So generally the tech stock market's holding a little bit higher. S&P 500 up at 38.20 as well. Russell up 58 cents. Pretty much break even on the day at 209. And let's just take a look on here and see where we're at on the DIA, the Dow Jones. We'll look at the charts in a little bit more detail in just a second on here. But going over to the charts, the good old Dow, I don't give enough love to really right now. Trading at 308.96, up $5.70 on the day, 1.8% as well. So we did have a rough Wednesday, massive sell-off in the market yesterday. In the live trading room, we enjoyed some of that upside and some of the downside, more importantly as well. The year has started and now people are beginning to panic. What else is going on? It's all been about being GameStop swinging wildly. Just now looking at the charts, well, I'm going to tell you about it in just a second. But earlier this morning in pre-market trading, we started to put in new highs on GameStop. And then we hit as high of around $500 a share. I can tell you right now, it ain't $500 a share right now as well. We will talk about that. American Airlines stock soars as much as 50%. Coming out with quarterly results right before the opening bell as well. And already, these guys are bouncing back as well. I've flown American a lot. I think like all of these have suffered, these airlines, but bouncing back after a pretty rough fourth quarter loss, but now coming back on here as well. Sorry, about 50% before cutting those gains in half again. I would say on here, what else are we looking at? McDonald's fourth quarter earnings revenue fell short of estimates. We had Microsoft yesterday blowing it out the water. We had Apple blowing it out the water as well. But the tech stocks are under pressure, and that's something I want to talk about. These companies coming out with great earnings, but not seeing the same movement necessarily in the market as well. I'm going to be talking all about that in the show today. How does this all fit in? Stocks is the theme today. The big boys and the little ones as well, rising from the dead. The AMCs, the GameStops, what's going on in the world? It's freaking nuts, I have to say this as well. The Fed, on the other hand, don't seem concerned about it. Jerome Powell, chairman of the Federal Reserve, was speaking in a virtual news conference from Illinois on earlier last month, and also talking about when all of this was under the surface as well. And today official statements say, hey, we are not bothered about it as well. This is something that may just pass. How do we feel about it? I don't know. Let's bring on and talk to my guests about this as well. We don't have just one guest on the show today, guys. We don't have just one guest on the show. I'm super excited about that. We have two guests for you on the show. We thought we'd mix things up a little bit this week as well. And I'm very proud to bring my two guests on the show. They can see they're being broadcast live. We are literally covering the world today. On the left, you have Brian Dumaresq, student momentum coach at Stockability, joining us from North Carolina now, after moving from New York. Been a regular on the show before. And we also have Graham Spruce joining us from just outside of London on the sunny coast. Well, I say it's sunny. It's probably damn cold out there as well. Stockability guided trade session coach as well. Guys, how are you both? Don't forget to unmute those microphones because I can see it. Say hi to the gang. What are you up to? How are we going? Good?
What's up, everybody? How's it going? Yeah, I just moved to North Carolina about a week ago, and
Nice.
I woke up this morning to an inch of snow.
Love.
I moved. I thought I was.
And And here on the East Coast, everyone keeps telling us we're getting snow, and guess what? You're getting it instead. You took it away from me. Thank you so much.
Yeah. The curse of Brian Dumaresq has struck again. An
Here
inch of
we
snow within my first week of being down here.
This is why I keep you only on virtual calls, Brian. I never bring you into my actual house.
Exactly.
It's all good. Graham,
Well, I woke up this morning and I just woke up to rain again.
Oh, there you go.
So
Well,
it's just normal, you know.
Just a normal sunny, rainy day-ish, greyish, who cares? I tell you, everyone always says to me about the weather, you know, in here in Pennsylvania, but it ain't much better here in Pennsylvania, I can tell you that right now. Guys, this is the first time on the show we've had two guests. This is really awesome and plenty to talk about. We actually got a subject that I'm going to be going through. We're doing another top 5 a little bit on the show. Top 5 components of a trade plan. And I think that this is a great subject, but I have to make room in the show for today, talking a little bit about the craziness, the mania, that's all I can really call it, of what's been going on with GameStop, Wall Street bets, people coming out now, the woodwork, saying that, you know, that this is a great thing, it's retipping the scales, it's all about balance and so on here. First thing I'm going to ask is this, you know, Brian, you come from a very, you know, an institutional background, as many of the viewers on the show would know as well. You know, you used to be a floor manager on there as well. What we're seeing, let's explain what's going on to anybody who's wondering in their head, you know, what is this short squeeze they're talking about? What exactly has been going on? Give us a little bit of a description of what has been going on here from how the media's been presenting it.
It's chaos. It's literally like the Wild West now, where, you know, a short squeeze has been around forever. I mean, a couple of years ago, Tesla, you know, was one of the largest shorted companies out there, and all of a sudden it started to, you know, spike up in price. So short basically means that hedge funds are shorting against something, thinking that price is going to go lower. So there's a couple ways to make money in the market. You could buy it low and sell it high. There's a profit. You could also sell it first, which is shorting it, and then buying it lower. Now, the more heavily shorted something is, the more bullish it is, because they have to buy back their shares. Now, if people start to see that, they can start to influence the price, and that's why GameStop has exploded the way it has. Okay, now these hedge funds are also pretty smart. I'm sure they have some type of hedges in place too to minimize their losses. Now, you know, like I said, even a couple of years ago, Herbalife was another company that was heavily shorted by a hedge fund, Pershing Square, run by Bill Ackman, and was also being bought by Carl Icahn. And I remember that was in the news for years, where Carl Icahn made over $1 billion, and Bill Ackman lost over $1 billion on that transaction. Well, that's what it says in the press anyway. You know, we'll never really know the true numbers, but it's been around for a long time. You know, and if you're a retail trader and you want to get involved with this, be careful. Because if you look at GameStop today, you know, it was up over around $400, and now it was just trading down over $200. So these moves can happen in a blink of an eye. You walk away without a stop loss in or protection, you can get really hurt bad. So as a retail investor, if it's part of your plan, go for it. Okay. But you better have proper risk management. Otherwise, it could be the last time you take a trade, because it's going to wipe your account clean. Just
talking about this, actually, you see, look, highs were put in at 483. This is a GameStop chart. I normally don't go this low when I'm on the show here, guys, and hopefully you can see this as I'm broadcasting it right now. We're on a 1 hour time frame. In the last hour, we sold off. Opening price here of $397, just under $400. Sold off to a low of $115. Bounced right back again to $300. I mean, this to me is not trading. This to me is not investing. It screams of me of just spinning the wheel, having fun. Graham, you've been a trader for pushing like a decade right now. Do you enjoy environments like this, or do you stay well away from it? What do you say? What do you see when you see this kind of craziness?
Yeah, this is not for the serious trader. I mean, this is just pure speculation from plenty of novice traders and retail traders jumping into the markets, just driving this thing higher. I mean, it's just, when you just look at something like this and these crazy moves, it's just not something that you just want to be part of, you know. Just staying safe and just staying to your risk parameters and staying to your plan. I mean, this is a crazy stock. I just really don't think something I wouldn't personally be looking at, but I know a lot of people are, and it's creating this absolutely insane environment that we're seeing.
But we've seen it before, like you say, Brian, right? This is nothing new. I mean, we were chatting about this beforehand. Now, you're not like looking at this going, oh, wow, this is it. I mean, look, people have made money on this. Let's not question it, okay? People have made a lot of money on it. But it's amazing, you know. I was reading articles in the paper just the other day, just actually yesterday even, Just people like kind of now bragging online and going, well, I just wasted all my time going to law school. I'm a full-time trader now. And it's like, well, this is one trade, right? We can all go down the track. We can all bet on a horse we like. We could put our life saving on it. And maybe, as people say, they take their stimulus checks. And yeah, you put $600 in this thing and you see what it goes. Great. But the question is it something that you're always going to be able to keep doing? And more importantly, are they going to be allowed to be doing it? Because many are arguing this is just insider trading in some form, right? I mean, is it any different to insider trading, Brian?
I can be honest with you, this to me is more gambling than anything. You talk to any gambler that goes to Vegas, Atlantic City, or even bets on football games or whatever. Yeah, you're going to have your winners, but you never hear about the losers.
Right.
People could make a lot of money on this, but then, they think they're going to be invincible. Because they bought and held it for X amount of time and it shot up and they got lucky. Hey, look, good for you. But in order to do this repeatedly, your chances are slim to none, and that's why having a consistent plan, like you were talking about a little bit before, is the key to longevity in this business. You know what? Everybody can get lucky and hit a home run, or that's actually a grand slam, really, if you think about it.
Sure.
But they are, few and far between those trades.
We could all win the lottery, right? If you buy a ticket. But I guess what? Your loss is the price of the ticket. It ain't costing you some of these people's life savings. A couple of comments on here. Phil Jackson saying it's like to show billions on Showtime. I mean, really?
Yeah.
But again, this is nothing new. This euphoria in the market, we've seen it back in the ages of sure technology is more readily available without a doubt right now and everything. But, again, I always say if it's that easy, then everybody would do it. And it's easy to get suckered into the hype as well. People have been friends of mine. My neighbour, I was just literally out for a walk. My neighbour's like, oh, I hope you were buying GameStop. And I'm like, why would I be buying GameStop?
Yeah.
Right? We were in a live trading room yesterday, Graham, and you were working with the live trading room, teaching students. We were looking at two markets in that room, the Dow Jones futures and the Russell futures. One of us was buying, one of us was selling. We actually both had profitable trades. Why were we tell us, Graham, why were we just looking at those indexes and not looking at GameStop in that session? Why were we doing that?
Yeah, because that's not in our wheelhouse. We've got very specific rules and a plan and a process to what we do every single day, and we come to look at very specific markets. We know what we're looking for. We have that repeatable process, and like you say, the one market the Dow Jones was going down yesterday, and then the Russell was then moving higher. We had a plan for both. We managed to capitalize on both. That's just a more safer kind of repeatable process over and over again, but with things like the GameStop thing, like you say, you're just swinging a bat. You're just swinging a bat hoping for a big win. And yes, people have probably had some big wins, but is that really repeatable? And at the end of the day, through what we do in trading, we have to be doing something that is repeatable to gain that kind of consistency in what we want. So things like GameStop aren't going to give you those, those kind of moves are great, but they're not going to give you repeatableness all the time. So just looking at a couple of markets like we do just makes you very objective and very focused in what you're doing. And then you can kind of plan ahead and act on your trades accordingly.
I think the thing for me has always been, it's like, yeah, this stuff can happen, but you want to go somewhere where there's always going to be water at the well, right? You want to go somewhere where you can always get fed, and you don't want it to be feast or famine. And you've got to make this safe. And what's ironic to me is people I've always said, well, futures markets are very dangerous, the leverage and all that. It's like, ironically, this is way more dangerous in the long run. What people are doing if you're with the risks that you can control in the markets like futures. And I think if you're looking to build something like consistency, maybe a regular income out of it, you've got to look at other markets. Like, I'm not interested in this. I'd rather trade the overall market, your S&Ps, your NASDAQ, your Dow Joneses, and then those big stocks as well, which I'd love to get your thoughts on in just a second too, rather than just going out there looking for these little gems. I mean, we look at this, and a couple of points I'd just love to talk about, and then before we can move on to some other things on here. Let's just go over to bring up the charts, and hopefully you guys can see this. Back on the GameStop chart, I want to just maximize this chart for just a second so all of our viewers can see this. And I really want to zoom in and I want to look at this. I'm going to just pan this chart up, so everybody can kind of see this and really get a good idea of it. I've had to kind of zoom in. Let's look at this stock. Lows, hopefully you can all see this here. Zooming in, lows of $2.57 a share. And when were those lows? Those lows were in April, May of last year. This is a stock that in the last 13 years has never been above $60 a share. I mean, you want to talk about fundamentals. Game stores, I love them, but I'm a gamer, right? I'm a gamer. I've been a gamer since the age of 7. I download all my games now. I don't go to the store, you know. It's a tough business, you know. It's a tough retail industry. Yet what baffles me is there's all these champions right now talking about how they're screwing over the institutions because they're those hedge funds that were heavily short on this. And great, maybe it is. Maybe it's the rise of the little guy against the hedge funds. My question is, and I have to zoom into this and ask you both your feelings on this. Why the heck was anybody short down here? That's what I don't get, is why were you banking? I mean, what were those funds banking on it doing? I mean, I don't get it. That's where it messes me up. Is like, why in the first place, after this kind of downward pressure we've seen for the last 5 years on GameStop, were these funds so heavily short? There's same things. It opens a question if people have this idea that every single hedge fund out there knows what it's doing. Contrary to popular belief, I don't believe they all do. What are your thoughts on that, Brian?
You know what? I think the hedge funds know what they're doing. It's just, look, they're not always right. You know, that's the misconception. I think that people think, oh, he works for a hedge fund. They must be right. I just told you before, you know, Bill Ackman in Herbalife lost $1 billion. But he probably was using options and other,
Right.
you know, strategies to help cut into that and hedge himself, hence hedge funds. Okay. Now, Carl Icahn, who's a long-term investor, he bought into it and he made that type of money. You know, these hedge funds are not always right. Okay. When I worked on the floor, we had, you know, multiple times where they were trying to, you know, they got maybe a tip on earnings or something like that and buy 100,000, you know, literally at 5 to 4 of whatever company it might have been. And the next day it opens down $5. It missed. Well, guess what? They're selling out of that 100,000. They just bought it's lost $500,000. Or, you know, there were times too where it gapped up $5 and they made that money, you know, but they got information that they thought was relevant to the situation. They try to take advantage of it. They are not always right.
And
okay?
also, and the retail crowd aren't always right. Here's AMC. That was the next big one that they were touting on there. How's that working out right now here? Hit $20.39 right now, but right back down to just a little bit above where it was. This is the bit that people don't seem to understand. There's this misconception out there that because something is cheap, it's low risk. Well, yeah, it is low risk if you buy maybe 100 shares of the stock. Let's just look at it like this for a minute, James. And I'd love your opinion on this, Graham. You buy 100 shares of a stock like this at $500 a share, right? Your outlay is an easy $500, right? It's not a whole lot. You get that nice pop. You're thinking, man, I've quadrupled my money on this. And then this goes up to 4 times the money. You're up $2,000 on it. Wow, wonderful. All great. Right now, guess what? You're right back to just doubling your money up to 1,000. So you're only doubling your money. But here's the real killer. People don't buy the lows. How many people do we think, gents, were buying it way up here and looking at it there and then now putting, you know, a couple of $1,000s into a stock like this and here they are the very next day and what have they done? They've lost half of their money. Is cheap, Graham, always as good as it seems? Or is it, let's say, you get what you pay for, right? What are your thoughts on that?
Yeah, I mean, it's the whole retail mindset, you know. We're trained to do this in a very funny way. It's kind of, you know, we see prices going higher, and it's just the crazy thing. Would you do that in your everyday life? You know, if you went down to the car showroom and you saw a car that you wanted to buy and it was gradually increasing in value and it was going higher and higher and higher, would you wait until it was its most expensive price and then you start buying it? No, of course you wouldn't. You would never do that with a car. But what makes people want to do that with stocks? It's kind of like this fear of missing out, you know, this whole hype around it. Prices get inflated and prices are moving higher and everyone wants to jump on board. But what's really happening? You're buying it really high. You're paying a lot of money for it. And the minute you spend, you pay a lot of money for something up at retail prices, guess what happens? Prices come back down again. And then you're sitting there sat in a position thinking it was doing okay a few days ago, but now I'm kind of potentially down and maybe I'm even at a loss. Then what do? You end up buying more and you start doing this thing called dollar cost averaging and stuff like that. So you can get yourself into a whole world of pain. But it's just the general retail trader mindset of seeing something go up and just this fear of not being involved in it, and everyone's talking about it, and your uncle's texting you about it.
It's just like Bitcoin again.
Exactly the same. And you got
to look, everyone's like, they're doing this on AMC, so I'm going to jump in. How many people do we think jumped in right here, guys? Right at this particular point, and now we see it goes down. I just write it on the chart here, guys. FOMO, fear of missing out. You know, it's the same thing. Fear of missing out is a very, very dangerous thing. I know you work with a lot of students, Brian. How much does that impact a lot of these investors and traders, that fear of missing out? And how much does it hurt them in the long run?
Do you know how many people I talk to that I just bought XYZ And I look at a chart. I'm like, ugh. I'm like, why? Well, because it's going to go up. I'm like, well, what happens if it doesn't? Well, I'll hold it. Now it turns into a buy and hold. People don't know how to manage their risk. That's the biggest problem. Fear of missing out is the biggest culprit because it's emotion.
Yeah.
Emotions in this business, you have got to just forget it at the door, leave it there, sit down at your desk, stand at your desk, whatever you're doing, at your phone, and you have to have a systematic plan to get in. This is where I'm getting in only because this is how we're going to manage my risk. People do not understand that. You know how many people I know? Well, I bought the Boeing at 330. Well, how's that going? It's at 190 now, I think. Well, I thought that was the only way to do things. I'm like, well, no, it's not. I know other people as well. Like my wife, she's a nurse in a hospital. Okay. And one of the girls she works with has been trading, and she's like, I'm making so much money. I'm thinking about not going to. I'm making so much money trading. I'm thinking about not finishing my degree at
Wow.
nursing school. I'm like, Jen, my wife's name is Jen. I'm like, Jen, tell her to finish her degree. Because right now in a bull market, everyone's making money. Don't ever confuse, brains for a bull market for having brains in your trading.
Yeah.
Because when this market sells off, and it hits people hard because they're not going to be managing their risk the right way. All these people who were telling you how great they're doing are now not going to tell you how much they're losing.
Right.
Okay. And that's the biggest problem. Like yesterday's sell off was probably good for a lot of people in a lot of ways of smacking them around a little bit
Yeah.
and just saying, hey, you know what? I got to be careful here because not every time it's going to come back.
Yeah.
Right? You never know. Like look at Enron from 20 years ago. Enron was a $100 company, oil company, and now it's no longer in existence. I mean, the list is endless. You could have bought GE 20 years ago at $55. It's at $11 now. Like you need to know what you're looking at. You
And
need
some
to
don't recover,
understand
and some don't recover.
exactly my point.
And even
You know
on a
what?
down, and even in the down market, the problem you have as well, even in the down markets as well, is occasionally you get the big boys. They suffer as well. I mean, let's remember, Apple got destroyed in 2008, but then a good quality company that bounced back strongly right now as well. But it's very difficult. It's very dangerous or very hard to tell somebody. When you had a little bit of success at something, then they think they cracked it. And, it's fine. I always say, you can't, you can lead the horse to water, but you can't make it drink. I think it's a shame because sometimes you have to find that out for yourself. And sometimes you find it out the hard way as well. Let's talk again on that subject. I mean, I think, at the end of the day, couple of final points I'd love to add on this, talking on the game. So I saw, the press, they don't help a lot of this as well. I saw just today, Mark Cuban, we all know Mark Cuban, was saying that his 11-year-old son has made money doing stuff on Wall Street bets, right? And Mark Cuban quote says, I love it, I love it, I love it, what's going on. Well, let's all remember how much money's Mark Cuban got and how much money is probably his kid playing with that he doesn't even care about. People would say that, well, if Mark Cuban's saying it's good to do, have you got Mark Cuban's money? He's probably put like a couple of $1 million in his kid's account just to have a little bit of fun with, The kid's got more money than most people making their whole life, right? Who knows what it is? You're not in the same environment, right? We've also got, entrepreneurs out there, respected entrepreneurs saying Wall Street bets traders can do the same fundamental analysis today as hedge fund managers. When I hear things like that, I think that's irresponsible, and I will be outspoken about it because I'm not being funny right now. Does the average retail investor have the ability to do the same fundamental analysis as a hedge fund?
No,
Really? I mean, can they send people abroad to go and look at what companies are doing? What are your takes on that, Graham? What's your takes on both of you? I'd love to hear from both of you. Graham first.
Yeah, we don't have that kind of information. Banks and institutions are privy to all of that information. They get a lot of that information before the retail public get it. They can position themselves accordingly. They have a much better way of being able to do it than what the average retail trader does. So, it's the ball's always going to be in their court for sure. So it's not something we can't even be in the same league as those guys, I mean, we can do our analysis from price charts, but when it comes down to fundamentals and the real driving force behind a lot of these businesses, we're never really going to know as much information as what these big institutions do, for sure.
I used to work at a couple of institutions, large institutions. First one I worked at was a company called Donaldson, Lufkin and Jenrette back in early 90s. And I became friends with one of the analysts there. Mm-hmm. And great guy. When he spoke, he could actually move stocks. That's how big of a name he was and respected on the analytical part of it. And I would talk to him all the time. And he's like, I remember when Whole Foods came out, he goes, I'm flying out to Whole Foods headquarters. I'm going to meet with the CEO, and I sit down with them because I want to see what their plan is for the next 10 years. They don't care what's going on today. What's the growth like over years? I mean, he was buying Whole Foods at like $30.
Right.
Back 20 years ago because he saw the bigger picture, but that's what these analysts do. These big people who also work for the hedge funds, mutual fund companies, pension
And those
funds, so on and
analysts
so
have
forth.
full-time, very well-paid jobs. They're not,
Yeah. I mean, multiple seven figures, you know what I'm saying? And these guys go to high quality schools to learn about how to break down, balance sheets and everything else that goes into it. But these guys know from a fundamental, like, what are we going to look at? PE ratios? What are we going to look? You know what I'm saying? Like with sales, they could have had much better expectations or lesser expectations. Who knows? That's why I mean, don't kid yourself. The retail person, yeah, you could look at a chart and you could look at some fundamentals, but you're not even close to what these big hedge fund, mutual fund, or analysts are doing at the big institutional banks and institutions and that stuff like that.
It really is a very interesting kind of topic as well. One I've always loved as well. How much do you think? And then before we kind of move on to the next subject of today's show, I mean, let's just ask ourselves the question: how much then do you really think, in the grand scheme of it, the retail traders can do this and have their way with a market like this? Is it feasible? Is it possible to continue? Something tells me no. Something tells me in the long run, Wall Street always has its way. Wall Street always gets its day, and something and then again, you're not hearing what Goldman's are doing here. There's hedge funds of all different sizes, money funds of all different sizes, right? They're not all built the same. Is this something that can last?
Most retail traders don't even know what short selling means. Okay, they don't even know what a short squeeze is. They don't even know what's really going on. They're just following the herd, and that's a big problem too. All right, they're just doing what everybody else said. I think Graham was saying before. Oh, your uncle said buy this, so you're going to do it. Okay, he might know something, or the fear of missing out. Even a couple years ago, when the marijuana stocks were literally on fire.
Yeah.
No
Yes.
no pun intended. Okay, Tilray, TLRY, that thing spiked up literally from like $50 to 300, I think, in like 3 days. It was insane. And now I don't even know what's trading now. I think it's below $20. But it's just like a perfect straight up, straight back down. Okay, how many people bought 300 thinking, oh, marijuana's going to be legalized in the United States. It's going to be everywhere, blah, blah, blah. You know what I'm saying? Like, okay, well, no, it didn't work out the way you thought. So, well, I mean, whatever. I mean, these people are just chasing a dream and gambling more than anything.
Yeah.
That's the biggest problem. And they're also, using too big of a share size for how big their account is, which is another problem.
Right. Graham, any last thoughts on this? I mean, like I say, do we think it can continue? Do we think we're allowed? Or, really for someone like yourself who's been doing this a long time, teaches this now, is it just business as normal?
It's just business as normal. I think you're going to have periods like this, and we're seeing it more and more with the accessibility on social media, things like Reddit and all this kind of stuff, all these kind of places where people can come together and talk about trading, but not really have a real perspective of what trading's about. And they can talk these stocks up, and we start to see these crazy moves. Is it over? No, I don't think it is. I think we're going to see it more and more and more. Do we get involved in it? No, we don't. We stick to what we know best. We stick to the things that we like trading. And yes, it's great to watch. It's like a popcorn trade. It's nice to see this stuff flying up and down like Bitcoin and all these kind of stocks like GameStop and AMC and stuff like that. But I don't think it's going to stop, to be honest with you, Sam. I think we're going to see more and more of it. I think it's going to continue, and we're going to probably still be talking about this the next month and the next month after that. So I don't think it's something that's actually going to go away. I think it's just started, to be fair.
I always look at it like this. I love hitting a few balls around the golf course, and sometimes I have a really good day, but I ain't making any money out of it in the long run. It's one of those things.
Yeah, and I've seen you play golf, so yeah.
There you go. Exactly. So, I mean, great stuff. Great. I mean, look, let's shift gears for a second, guys. And we've probably got about 10 minutes, 15 minutes left on the show. And I want you both to have a little think, because we normally do our feature, Your Call, My Put. So I'm going to give you gentlemen the opportunity to pick between you, your call and my put. And I'm going to be the mediator in this one. Today's show, I love to do a little top 5 on here. And I thought, it was really interesting. I already had the show planned out. And we were going to be talking a little bit about, trade plans. And I was like, well, we've got to talk about this short squeeze phenomenon. We've got to talk about what's going on. We are a live show. But, I think everything we've spoken about right now echoes the importance that, at the end of the day, we need to have a trade plan. And a trade plan can work in any kind of, or an investment plan can work in any environment. Graham, I saw you just yesterday doing, a live training session where, you're instructing the students that there was a great opportunity to buy the Russell Index. And I actually what I'm going to do is I'm going to go ahead and, pull the chart up first, because this is great. So I'm going to just bring this up. I'm not going to go into the small time frames, but let's just go to this, over to the futures on here, and talk a little bit about this. I'm going to just zoom in on this chart over here. On the right hand side, and let's just go full screen so everybody at home can view this. I want to go down to a smaller time frame just for a little second, and let's do about 30 minutes on the chart. Now, interestingly enough, let's just zoom into this price action so we got a nice clear bit so everybody at home can see this. This should be nice and clear for you all. This was yesterday. I know you had an entry yesterday at 2085, and again, I've got the video of this, so I'm not anyone looking at this right now. As you say, but Graham was instructing the students to actually buy the market. And let's just make a little thing right at this point here. And we had but then I also remember you instructing the students that right up here, there would be a nice selling opportunity as well. Now, me yesterday, I just took a short trade on a breakout on the downside of the Dow Jones. Now, what we can actually look at here is since those calls, we went up, okay, beautifully. We've come back down, we've gone back up, we've gone back down. The point is you had a specific entry, knowing where you wanted to get in, what the risk was you wanted to take on that, where you wanted to get out of it. And we could look at that right now and go, well, based on that call that you made, Graham, and I'd like your opinion on this as well, Brian. We can say, well, look, you made a great call there, but if we'd have just bought it and held it, as traders, we'd be pretty disappointed right now because we're just kind of just a little bit above that at the moment. There was opportunity on the upside, there was opportunity on the downside. Did you need a GameStop? Do you need an AMC? Do you need that to make that? And of course not as well. What that takes is a kind of a plan when you're doing that. How is the mindset different, guys, when you have a plan? What does that do? Because I've always felt that when you've got a true plan, you read the market, there's opportunity everywhere. You don't need those, once in a lifetime opportunities, right?
The most important thing about having a plan is it eliminates emotion.
Yeah.
I mean, you think about it. Graham did his prep work beforehand. Obviously, he had his zone set up. He probably had his entry already in there. Okay, he knew what his risk was. He probably had his stop loss in below that area somewhere, and let it do its thing. He knew the opposing zone of where it could potentially go to, and he would have managed it accordingly. So he knew exactly what he was doing. He was in control. That's the most important thing. Okay. All right. If I get stopped out, I'm okay with that because I'm okay losing X amount of dollars. That's part of my plan. It's a percentage of my overall account. So these things are all factored in before you even get engaged. Okay. So kudos to you, Graham. Excellent job.
It's a great job. And I know you were looking and you had like systematic targets along the way as the market was going, Graham. It was a great call for your first one as well on there. Are you looking for home runs, Graham, when you're trading, or are you just looking for the easy money? Or, and when I say easy money, maybe it's for want of a better word, the easy money. Easy as in emotionally easy, not easy as in it doesn't take skill. Like, what's your kind of process in that respect?
Yeah, I mean, depending on your style of trading, yesterday's session was a day trading session. So we're looking to take the kind of low hanging fruit, and the charts are going to tell us what that low hanging fruit is. So by planning out the trade ahead of time, we knew exactly where we were going to get into the trade, but we also knew exactly where our profit targets were going to be. Yeah. So having that all planned out ahead of time, there was no kind of emotional things that can come into effect because emotions can really affect you when you're actually in the trade. So you have to kind of plan this stuff out and go, okay, if I get in here, where is my protective stop loss? I know what my risk is. My risk is defined. If I get a stop out, that's completely fine. That's okay. Here are my profit targets. And we had them set, target 1, target 2, target 3, they all hit, which was fine. Because our plan told us that there was a good chance that the market could sell off up at those areas where it did sell off from. So could we have let it go? Yeah, you could. But at the end of the day, it was a day trade, and we kind of had it set up to kind of get in and get out. Are there opportunities to let it go longer? Absolutely. When the charts tell you that potentially you could let it run a bit further, then you could let it run a bit further. But our plan was very, very precise that day to kind of take action, get in and get out.
And what was ironic as well is I've just pulled up now for the viewers here a chart of, actually, let's just go back a second on here so we can see this chart of the Dow Jones. And, just looking at the Dow Jones, we'll just put this in the middle of the screen right now, but looking at this Dow Jones, ironically, when we were doing the session, I was actually looking for a short breakout to the downside where I actually hit that, got my targets as well. And then we had a retracement and that broke down real nice. But I mean, I could have been short. And if you've never heard of the terminology short, making money on the downside, we might have to do that as a subject on the show at some point. If I'd have still been holding on to that short position with a real long opinion, without a good short-term opinion, I'd be pretty peed off right now because I've been giving that all right back again as well. That's the point. There has to be opportunistic and capture those moves. And I think the important thing is the separation. When my neighbor literally said to me, he goes, well, how's it different what you do every day to what's going on GameStop? I'm like, well, I'm not relying on once in a lifetime events. I'm going to the market, rain, wind, sun, busy, volatile, normal, and looking to just take my piece out of the market. When you say, guys, that's fair, we're there. Doesn't matter what, but it's also about using the right markets. Notice here, what we're looking at, the YM, what is that? That's the futures contract on the Dow Jones. We're looking at whole indexes here, guys. Safety. And so much of this begins with picking, I think, the right markets as opposed to the wrong markets. And I think a lot of people lose sight over that as well. What I thought would be cool, let's talk about our top 5 on here and, talk about some of the things on here that we've got. I put the top 5 of a trade plan, of an investment plan, whether you're a long-term investor, short-term investor, active trader. Number 1 on our top 5 components, performance enhancers for your trade plan is, number 1, defining your risk control.
Hey, Sam, could you enlarge that? I could hardly see that. Could you just enlarge that a little bit?
I can't enlarge it on there. I can do a lot of magic. I can do a lot of magic on my screen. But,
okay.
I'm juggling a few things. Can't give a man a little bit of sight. That's the problem when you bring a New Yorker into all of this and mix him with a Londoner.
Sorry about that.
Yes, what I mean? Never happy. So, I mean, geez, it's all right. Don't worry. I'll work it. I'll do the magical charts.
Don't worry about it. It's fine. It's fine. Let's keep going.
Define risk control. Defining our risk control. How do we feel about that, guys? Defining our risk control on this.
Yeah, this is so critical. Making sure that our risk amount is proportionate to your account size. Have a certain risk percentage based on your account size. Because if you don't, and you take losses that are too big compared to your account size, they can have big effects on your mental account and can psychologically kind of cause you to not then follow your plan and then take the next opportunity. So they can really, really hurt you. So defining that risk control is so key, and making sure you stick to it, because it can also be quite easy to get overconfident and think, oh, okay, I've done really well. I'm just going to expand my risk control and expand the percentage I'm going to risk because I'm on a really good winning streak. And guess what happens? Slap, it comes back on you, and you feel the force of it. So we've got to kind of protect that mental account as well as your monetary account as well. So making sure we define our risk proportionate to your account size is so important, and being able to stick with that as well. And also being able to control your risk whilst you're in a trade.
I cut myself out for you, Brian. There you go.
Oh, look, he's done it.
Look at that. Mr.
Much better.
Mr. Media. There you go. I'll have to stand over here, so I want you on the screen. So
it's all there.
Right there you go. So
my last point on that was just, and also making sure that you have a plan of action to control your risk whilst you're in the trade. So how are you going to manage? Are you going to be taking your risk out of the trade? All that has to be thought about before you're in the trade. Because once you're in the trade, emotions take control, and then you can do all sorts of stuff. So that has to be part, and it all comes back down to that planning, that process, and having a systematic approach to what you do. So yeah, it's huge. Defining risk is massive.
So
anything
one thing I'll just add to that. I'm sorry?
Anything to add on that, my friend?
Graham, I thought you nailed it, really. Ryan Watkins, who's our other instructor here, nailed it the other day, and he goes, look, I'm not really a trader. He goes, I'm a risk manager. He goes, that's all you're doing. That's the bottom line.
Yes.
You're going to have I don't care if you have a $5,000 account or a $5 million account. You need to, deal with your risk every single step of the way. Okay. Because that $5 million could easily turn into $1 million, if you're not careful. So that's like Graham nailed it with everything he just said.
I think too many times we focus so much on the winning that we forget that it's the losing that allows us to win, and losing small, and I say many aspects on that. It says defining risk control, many aspects. What I mean by that is very simply that, guys, over trading, clicking buttons unnecessarily. You know, I'm at a point where 2 or 3 opportunities a day is more than enough for me. Sometimes just the one. So again, it's all about that balance. I think that we can key. So any good trade plan has to have that. Developing a watch list. I think this is a great one. I put on here as well. A watch list. Do you want to be scanning them? Do you like guys scan the markets? First, you, Brian. Do you scan the markets looking for things, or you just find it easier to just do the same thing over and over again?
You know what's funny is when I first started, after Bear Stearns went out of business, I sat in my basement and started trading. I realized I didn't really know what I was doing from a technical standpoint, and I needed help. So when I first started trading, I would literally quote the entire S&P 500 once a week. And I would put my alerts in.
Wow.
I would do all this stuff. The only problem is the next day I'd have about 50 alerts go off, and I'd be like, which one do I trade? You know, and I was all over the place. You know, then of course, I would trade the one that didn't work out, and the other 49 did, but the one I took did not work out for whatever reason. But over time, I learned that if I become more efficient with my time and use just a small group of, I trade futures. I look at 3 or 4 futures contracts every day. That is it. Okay. Now, to me, that's a huge advantage because now I become more intimate with them. I understand their levels. I understand, where it could potentially go. And I understand the way it trades. You just have a better overall feeling of those. And now I don't even look at it. I mean, long-term stuff, I'll look at other things, but that's, another conversation. I'm talking about like every day when I look at things for my futures account, I just look at 3 or 4 different futures contracts, and that's pretty much it. And I've noticed that my trading has got significantly better because now, like I said, I'm more efficient with my time, and I just been working out much better for me.
What about you, Graham?
Yeah, I agree with exactly what Brian said there. I think a lot of it depends on the style of trading as well. So, like Brian said, I mean, I day trade. So when I very first started, I'd find myself looking at 10, 15, 20 markets to day trade. And I'll look back at it now and think, what the hell was I doing this? Kind of
right.
Having that focus on just a few markets that give you opportunities is all you really need. Because if you really think about it, how can you analyze 10, 15 markets on a day trading basis when it's such a fast moving market and it's such a style of trading where you have to be on the ball and things happen pretty quickly? You've got a lot to think about and a lot to do, and you can make mistakes really, really easily by kind of complicating it by looking at so much stuff. And also, if you're looking at a lot of markets, you may have trading opportunities in all of them. So you have to think to yourself, well, if I have trading opportunities in every single one of these markets, am I going to take every single trade?
Sure.
Well, what does your risk tolerance allow you to do? Does it allow you to take 10 different trades in a day? Probably not. So you go down the road saying, okay, well, I'll tell you what, I'll just trade this one, this one, this one. And what happens? You trade this one, this one, this one. Those trades don't work, but the other trades that you didn't take do work. It just always happens. And then you go into this kind of spiral.
Cherry picking is a dangerous thing, right?
Of course.
It's a dangerous thing. Just keep it simplified. Look at select markets that you know that you like to trade and just stick with it and just consistently trade those markets. Absolutely.
Awesome. All right, let's do number 3 then. What do we got? We have apply to a time, day or week. What I meant by this was, and again, I when I was putting this together, I was like, well, I'm pretty regimented. There's a time of day when I like to look for setups, and there's a time in the week when I like to just do my long-term analysis and have a routine on that. Is that something that's important to you, Graham? Having that time of day and that routine as well?
Yeah, absolutely. It kind of, again, it comes back to your trading style. So day trading, you've got your set times in the morning that you like to come to the markets, look at your charts, you get into that routine, you develop like a habit.
Yeah.
As such, you go in and you create these processes and you follow your plan, and it's a step-by-step process. You get into that kind of habit. You know what time you have to do that before the market opens. You're not panicking. You've got your approach. It's all good. And with kind of some of the swing and position stuff, you've got a bit more time to do it. So once the kind of day trading's out of the way, you've got time to do it. You can even do some of that stuff over the weekends. You can put time aside to do that then, because you don't have to, it's not frantic. You've got time to sit there and plan your trades out. So being able to do that and split those times up. I mean, there was a time when I'd look at everything, I'd try and be looking at day trade, swing trade, all at the same time. And it's just confusing. So kind of splitting those things out. Yeah. Segregating certain time to do certain things. It makes it much easier for you to do, really. It makes it much more easier to follow things, for sure.
I know you like an easy life, Brian. You want to add to that?
You know what's funny? When I first started, I had 3 monitors. It was like a cockpit of a jet. and I was looking at everything. But I realized over time, simplifying was the key to success. Because when you start looking at too many things, you have paralysis by analysis. And also getting back to the time frame, I'm a day trader. I get up about a little bit before an hour before the market open. I get at my desk, excuse me, like an hour before the market opens. I do my pre-market routine, and then longer term stuff, swing trading stuff, I'll look at like on a Sunday afternoon or right after dinner for an hour or two. But very similar to what Graham said, but I have my routine down that it's in the morning. I'm usually done by 12 o'clock the latest, and during the day. Afternoon, I go and do whatever else I have to do, and then Sunday afternoon, like 5, 6, 7 o'clock, somewhere around there, is when I spend some time looking at the longer term stuff. So
nice and easy. Nice and easy. I love that very much.
Yeah, and by the way, I no longer have a cockpit in front of me. I have literally a laptop.
I know. Traded less. I have more screens
like,
now because I have to do the show.
Yeah. Well, I mean,
If
I'm talking about trading wise. I have one screen.
I'll tell you one thing I will add to this though. Trade those apps on phones. They can be very dangerous.
Very
dangerous for people. Why? Why? Because you can be glued to it, out and about, constantly worrying, looking at it. I think apps on phones are really good to manage positions, manage trades. That's a wonderful thing. But anything more than that, just be very careful, guys. You don't want to get addicted. Number 4, have a systematic strategy. I think that, again, people just look at charts. They don't really know where they're getting. Oh, it looks like it's going up. It looks like it's going down. Let's give me some thoughts on that, Brian.
Well, you know what? All we got to do is just go back to Graham's example from yesterday. I mean, his systematic plan, right? He actually did some prep before the GTS session. He marked off his zone. He knew where he wanted to buy it. Whoever was in the class maybe piggybacked him. And you know what, though? It was a phenomenal trade. But that was all from preparation. He has rules that he wants to follow. And you know what? He followed his rules to a T. He found a high-quality entry zone. He knew where his target was, and he let it play out. That's all about a system. You know what he didn't have during that whole entire time? Was an emotional roller coaster going inside like that gambler gets when it's like, oh man, there's 3 seconds left in the game. I need this guy to kick a field goal so I can cover the spread or whatever. No, that emotion is not there. Okay. He could set it up, have his risk parameters in, his target in, and go for a walk. Do whatever he's got to do.
Maybe only do a couple of trades a week. I mean, a lot of people who I find are really good at this, they don't have it. They have a system. There's even days when in their system, if they don't get the right parameters, they don't pull the trigger. Do you get days like that, Graham?
Yeah.
Absolutely. As much as we are day traders, we'd like to get trades every day. It's simply just not the case. You can do your analysis and you could have the best will in the world to take a trade, but if the price doesn't come down to your entry and you're not posting, then you may not have a trade. And that's something that is so big in trading. And I think you said it before, I don't think it should be called trading. It should be called waiting, because you do spend most of your time waiting for your setups, and you have to, and that's all part of your plan, your process to be patient. So there's some days you're going to have trades and there's some days you're not going to have trades, and that's okay, because there's always tomorrow and the day after, and there's always still trading and stuff. There's always opportunity somewhere else.
I always said I felt like I had an evolution when I didn't look for trades anymore. I just saw them, and that was really what it was.
Yeah, and good trades like that, they don't take long to find. They kind of pop out on the screen. If you're finding yourself looking at the charts and doing your analysis, and you're still looking at it 20 minutes later, and you still can't decide if you want to be a buyer or a seller, or where you should buy and sell.
There's probably not there, right?
There's probably not there. There's probably nothing to do.
It's like, I look at this. I'm looking at this chart right now, this Russell, just zoom in for you. And I was saying, if someone tried to make me pull the trigger on this right now, I'd say, no, thank you. I'll rather go do something else. It's nothing there. There's nothing to talk about.
Yep.
It's done.
Diddling in the middle.
It's in the middle.
Diddling in the middle.
Again, it's that reaction. I hate to keep going on about it, but, it was amazing. You look at the reaction in this last 30 minutes, of what we've been seeing on GameStop. And look, just look at this reaction and look at these wild swings, my friends. Look, you were down at 125, you were back up at 300, you're back at 260. In the time that we've been talking, this is traded in almost $100 range between here and here. That's $100 range. And you keep getting chopped to pieces. And man, you know where it gets really ugly, guys? It gets really ugly when people then start going down to these really small, fast time frames. It's just a recipe for disaster, isn't it? And again, I think if you have a systematic plan,
oh God, yes, it is.
It is. It's react. And
you're right.
Listen. Somebody who hasn't been through this will say these guys are full of it, right? They don't know. But again, experience comes from learning lessons, from getting slapped around, and then taking those lessons and then turning them to your advantage. That's what experience is to me. And my experience has told me over the years, that, having a plan of knowing when to pull the trigger, when to not pull the trigger, and also just sometimes knowing when to do nothing is always going to be hugely advantageous in that respect as well. Guys, we've got one more here. Let's take a look at our last one. What is this one on here for us? Okay, on our top 5. We had, have a systematic, make it red light, green light. What do I mean by this? This is one of the things I say a lot, red light, green light. I think it means that's then pulling the trigger, because you can have a plan and you can know what you want to do, but how important it is then to just get that signal that just makes you instinctively pull the trigger? And is that something that comes overnight? Like for me, it hits a certain point, no thinking, this is what I'm doing, and there's my green light to go. My red light is I'm done on it. To me, that's the biggest difference maker of all. That is giving you the permission to buy and sell. I suppose when you were looking at all your monitors and you had your cockpit, Brian, that was hard to do. Have you found that you've had to work more into that red light, green light, if this, then that process?
Yeah, getting back to having those 3 monitors in front of me, like I was saying before, it was paralysis by analysis.
Yeah.
I was like paralyzing myself, and like I would have like 4, say I was waiting for 5 things to set up. I'm like, well, I got 3 yes, 2 no. I'm not going to take it. There was a lot of indecision, which was horrible feeling. Ever since I simplified my strategy, my system, and now I have checkpoints, boom, 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 I'm buying it, or I'm shorting it, or whatever it may be. Okay. It's not lining up. Like before we were talking about, like, I'm looking for setups or whatever. I'm like, honestly, Sam, a lot of things are diddling in the middle. I don't have a good feel either way.
Right.
And that's really what it was. Like I didn't have, so I mean, I didn't do anything today trading wise because I had a busy morning and stuff like that. But you know what? If I don't, I guess through experience and years of trading, whatever, you're right. I know when there's a good setup. I have a good feeling when something's going to turn and go in my favor, or I know where something's going to bounce off of. That's my green light. I'm not even going to hesitate. I'm going to enter my order and wait for it. And plus, I never use market orders when I enter. Everything's always on a limit order. I find that if I use a market order in my past, it generated some type of emotion.
Yeah.
And my entry price was horrible. So I'd rather wait for something to come to me in my zone. Okay.
Beautiful. Graham, final points on that?
Yeah, when you come to like the red light, green light, I think it's really important to, that can come in many different shapes and forms, like say, for instance, when I do some kind of swing and position trading, it's like a simple repeatable process. It's simply just like step 1, step 2, step 3. If you're trading in the direction of the dominant trend, for instance, you need to be able to look at a price chart and just be able to look at it in a split second and say, are we trending? If I'm a trend trader, I either want to be seeing an uptrend or I want to be seeing a downtrend. If I have an uptrend or a downtrend in front of me and I can see that clearly, I then can move to step 2. I potentially have a trading opportunity there. If I'm looking at the market and it's kind of rangy and I can't really work out whether it's in a trend or not, then guess what? That's my red light to turn around and say, you know what? I move on to something else.
Yeah.
Just keeping it that simple, and that's a really kind of simple step-by-step process to kind of work through. And again, that just comes back down to planning and process, and creating just a daily habit in what you do can really help you make those decisions for sure.
Great stuff, guys. Thank you. So there's our top 5 components of a trade plan. Defining risk control, which I think is the most important of all of them. Developing a watch list, applying that watch list and that control and that plan to a time of day or a time of week. Having a systematic strategy, making it red light, green light. Guys, super helpful. Absolutely enjoyed that. Thank you so much. We're coming to the end of the show. We always like to do our feature, Your Call, My Put. One of you's got to be bullish. One of you's got to be bearish. I'm going to let you fight this out amongst each other right now. I know your feelings pre-show on this one, Brian, but it wouldn't be TakeStock. And then I want to go through this and I want to talk about some of the webinars I know you're going to be involved in coming up in the next couple of weeks as well. I'm going to say on here, anyone got a preference on this?
I have a couple of bullish ideas, but they're a little bit lower. I've been tracking the solar sector for quite some time. I think on the last radio show I did with you, I was talking how the stock market will tip you off on things, and that's how I knew kind of Biden won when I saw all the solar stocks taking off and all that type of stuff. So the solar stocks got very, very top heavy. A couple of the names that I look at and owned, much lower are SunPower, SPWR, and also another one called Enphase. Enphase was a grand slam. It really was. Somewhere in the middle, they announced that they were going to go into one of the indexes. It was replacing Cabot Oil and Gas. And once that happened, I knew all the institutions that had that particular fund had to buy into it. So that would cause another, feeding frenzy to the upside. So I knew I had more of it to go. Is that SunPower?
Yeah, this is a monthly chart. I'm going to look at the long term. I got to say, after this seems like a pretty key area around the $50 mark.
Yeah.
But to me, if we could take out that $50 mark right around here, I'm going to go ahead and just kind of mark this area. This makes to me looks like at least maybe an $80, $90 stock in the coming months, Brian.
It could be.
Well. Yeah.
I was also thinking if it pulls back to around the $35 level. I know it's about about 12. What's about $49 right now?
Yeah, let's go zoom in onto this one as well and just kind of take it a kind of smaller snapshot. But yeah, liking it around say this area, maybe even the $25 mark or something. Looks to me like it needs a pullback though. You know that whole too fast concept we talk a lot about.
Yeah,
and
exactly.
you can see some sell pressure coming into that right now. But I mean, even at a push, looking at the charts just from over in here as well, I see some nice little bit of price
that's just someone else
activity,
looking at.
also around that area there, which kind of would spark my interest as well. So SPWR, that's good. So you're bullish. Then Graham, it makes you bearish. Are you bearish? Do you dare to be bearish on anything? There's not just stocks involved on this show, my friend. So make your call.
Yeah, I'm going to go bearish actually, and I'm going to go bearish against our native currency.
Are you now?
The British pound, US dollar. I know. How dare I? I'm looking at around the 1.4s.
They're going to send you. They're going to send you to Australia as for treason. That wouldn't be a bad thing. That's why you're saying it to get out of that climate, right?
Trust me. Anywhere that doesn't rain, I'll take it.
Are you bearish now, Graham? Because again, we have had a tremendous run on this market. Let's just look at this on the shorter term around here. Beautiful uptrend still in this market as we speak at the moment. I would say steady and strong on the weeklies on here. What's got you thinking? What's your point that you're looking at? Because tell me your numbers you're thinking about on here.
Yeah, I'm kind of looking around the 1.4s, which is going to put us right up into some nice monthly resistance areas. We've got some weekly resistance areas up there as well. And the big round number, you can't really ignore that when we're looking at the Forex market. So the 1.4, I mean, may take another 2-3 weeks to get there. You don't know. It's about 300 pips away from that kind of area. But between the kind of 139.30s and the 140.30s, I think we've got a nice little area up there where we could potentially see some downside on the good old British pound. So that's the kind of area I'm looking at. Not just yet, but in a couple of weeks maybe.
I remain cautious on this. I agree with you. I think there's a ton of selling pressure. Definitely in this whole region here between 138 and 144, kind of like honing it down. 142 is kind of that magic number to 140. In our guided trade sessions, in our live trading room, we've been definitely buying these pullbacks, as you can see. Let's just clear off the chart for you on this for just a second. But these pullbacks have been great on here. What's got me a little bit concerned is the lackluster nature of it at the moment. You can feel it almost that it's getting a little concerned as it's getting to those highs on there. But I definitely agree there's a challenge for this. To me, a lot more sideways action maybe, but a little bit more upside. But I tell you one thing, Graham, I think that anybody with any kind of Forex or any kind of British pound exposure will be looking for a nice hedging opportunity up at that particular point for sure right now as well. Especially if you're going to be transferring any money over. I like it very much, guys. Hey, that was awesome for me. Wonderful not to have to be involved in any of that as well. And actually for once just kind of let you guys do the work as well. Brian, I know you're busy working with students and so on as well, doing your thing as well. I'll share this actually on the chart right now. Another webinar coming up real quick, honestly, and this is really exciting. I know we just come off the back of some webinars over at Stockability, and I'm just going to kind of pull these up on the charts. Over at stockability.com, you'll be able to see all the details of our coming webinars up here as well. Scroll down to the bottom. Busy week coming up. And a busy month comes. Scrolling to the bottom here, not one, not two, but 3 webinars on here that we've got coming up throughout February as well. The first one as well, short selling mechanics. This is going to be by co-founder and lead coach Dan Bustamante. If you love what we've been talking about at AMC and GameStop and all that kind of good stuff, great one there as well. Then we've got trading versus investing, which is right for you. That one's going to be on the 10th of February. And another one, the trading business blueprint as well. You're going to be a little bit involved in those, Brian?
Most likely, yes.
Good, good, good. What can someone expect for these as well? I mean, these are complimentary. Usually a couple of hours on here. What do you usually, guys? What usually do you like to kind of detail through and give somebody to expect on these coming to these?
You know what? We want people to show up and learn, learn something.
Yeah.
We want to, whatever topic we're going to be talking about. I think what's the first one? Dan's going to be talking about the short selling.
Yeah, this is going to be
So
focused heavily on like what's been going on GMC and how to take advantage of the next one, or if you missed out, what to do about it.
yeah,
Right?
well, that's the biggest problem is that people don't understand how short selling works. Even
Yeah.
like the behind the scenes, the logistical part of it. When your broker has it, what are they doing?
Yeah.
Okay, how do you have access to that? What do you need to do to buy it back? How do you make money on it? So many people say, well, I got to buy it high then sell it low. I'm like, well, no, basically just flip your screen upside down, and that's what you're gonna be doing, really.
Yeah.
You got to sell it first and buy it lower.
Yeah,
If you buy it higher than where you short it, that's where you're going to incur a loss.
Yeah.
Where people don't even understand the fundamentals of short selling, and that's very key because that's another strategy that you could implement into your system.
Mm-hmm.
Okay,
Mm-hmm.
because you could make money. There's more ways to make money in the market for just having it go up.
Exactly.
You can make it money when it's going down or even sideways if you know what you're doing.
Lovely. And also, I think that builds it into then also knowing then the difference between trading and investing and then building an overall business as well. We said this a lot. This should be treated like a business, okay, with the same principles of a business. I know you do that a lot, Graham, as well. Graham, what have you got in store coming up? So I think you've got a pretty busy day or week starting from tomorrow as well. Tell us a little bit about what you got going on there.
Yeah, so we've got a GTS trade session tomorrow morning. That's 2 p.m. GMT, 9 a.m. Eastern. So we'll be in the room with the students there for an hour and a quarter, going through, finding some trading setups, hopefully find some more trades like we did the other day.
Yeah.
And then we've got those sessions next week as well. So yeah, looking forward to those. So yeah, busy.
Well, busy weeks for both of you. Can I thank you on behalf of myself and all the viewers as well for taking the time out of your schedules to join us as well. I hope to have you both on the show again in the coming weeks. So have a great weekend. Good luck with everything next week as well. And I hope to see you both in a few weeks on the show as well. Guys, thank you so much. Guys, that was Graham Spruce and Brian Dumaresq of Stockability, lead coach and also student momentum coach. Great to have those guys on the show. Great to have those kind of with us and also talking a little bit about what they do as well. Love getting the different perspectives of, the retail trader who's now become the professional trader and also somebody who's been on the floor. I've worked in Wall Street and seen the things and the events that we've been seeing as well. I've had a lot of fun on this show. This has been an absolute blast for me and as well. And if you really like what you've heard, like what some of the things that we've been talking about, my advice to you is to head on over, like I said before, to stockability.com, to the main website on here. Let me just zoom in so you can see it here, stockability.com. And then what you need to do is go and scroll to the very bottom of the homepage, and there is not one, not two, but 3 webinars there of different varieties coming up in February. The first one is next Tuesday with Dan Bustamante. Short, powerful power hour on short selling mechanics and how to take advantage of those. Then trading versus investing, which one is right for you, coming on Wednesday 10th of February. And then a couple of weeks after that on Thursday 25th, the trading business blueprint. How to actually start to structure this like a business rather than just taking a punt and a little bit of a gamble as well. Really excited about that. I'll be on those webinars too, having some fun with the gang as well and holding things together too. Can't wait to see you there as well. Wow, what a week as well. So as we stand there right now, all I'm going to say to you all is be careful. The volatility is coming back for sure. And how do we do that? We have to kind of start to nail things down. Trade plans were the subject of our radio show, our talk show today. They are vital. A lot of people don't even know where to begin writing one. I hope the things that we went through with you today have at least given you a little bit of an idea of what kind of direction you should be taking that in as well. Guys, great to have you on the show. Phil, Ben, Brian, Lopez, great to have you all viewing, and everybody else. If you're looking at this recording and you want to find out more information about what we do, once this ends, we will have our information on there. This show will be restreamed here on Facebook Live. It also is going to be restreamed on the Stockability YouTube channel, which you can find by doing a very simple search. Guys, my name's Sam Evans. This has been Take Stock Live, powered by stockability.com. Thanks for joining me. I will see you all next week here live on Facebook Live at 12 noon. Have a great rest of your week. Enjoy it. Be safe out there. Thanks so much.